Here we go. Good morning, everybody. And it is Tuesday, what is it, October 6th, and trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in the foreign exchange, you should carefully consider your investment objective, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is a Hawkeye trading session, and this is a live trading room. It is for educational purposes only. No financial advice or recommendation will be provided. Any trades taken during this live session is not a recommendation or suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money you cannot afford to lose. And before trading live, always operate with a written trade plan that identifies rules for entry, exit targets, and risk management. And having said that, we have a alert that we had at 7:15, which was about 45 minutes ago on the US CAD. And I'm going to share my screen. I'll show you how I drew this one. And I am back to my normal mode of operation here, so that'll be helpful today. And share my screen. Here we go. And this is how I drew the wedge on this one. Now, that again,
what we... screen yet, Al?
Oh, I guess I have the share button. There we go. Now I bet you see it. Yes?
Yes.
Yes, okay, good. So what we're looking at is we're looking to see where a major trend is in both the upper trend line and lower trend line, reference to where the alert is. The alert's this now yellow dotted line. So I actually liked it from moving the D close to the alert line. My B, I have an anchor, a couple of near hits along the way, and then the D, and then it was ascending. So I start my A down here. So here is the pivot low, here's the pivot high, here's a higher low, which I have an anchor, a hit, and a hit. Here's my reference line. So this is how I drew the wedge, but I want to take reference to this pivot, and this one. These are all highs, lower highs, lower highs. So I'm going to draw what I call my major trend line to this area, and I'm going to see how many hits I can get off of this. And so what I have is I have an anchor, I have a hit, the B's a hit, so I can slide this over. This is my third hit on the trend line. So now this is the area that I'm looking at mostly if it breaks to the top to go to the upside. And then with the bottom, this was the pivot high this is basically the pivot high from yesterday, way up over here. Now this one came down, it didn't, this trend line doesn't sustain with this pivot up here, so I'm not going to use that one because here's where I have the three hits. On the bottom side, yes.
I'm going to step in for a sec. So, because it's coming up to a place where I would probably take a trade. So when it's coming up, I'm going to tag that wedge and comes back for a 5-minute candle close. I'll be in that trade for a short.
Okay, you're saying it's coming up into this area, and then we get a red candle follow, a close of a red candle, or just a red candle.
I'm happy with
because right now we have a red candle on the 15. Let's see where it is on the 5.
On the 5, you got 2 red candles, but I need it to. That's pretty close for me. That looks pretty good as a 5-minute candle close to the wedge, considering. Okay. But let me see here something. Just gonna check one more thing here, and I gotta blow up my chart now.
I did take this one. I did take this short on the pullback, but this is where my
I'm taking this as a short right now.
Yeah,
and I'll justify it later if people want to know exactly why, but I think it's pretty self-explanatory.
Yeah, well, right now it looks like it broke the wedge. Here's our little. Now we're going to start drawing these two pip zone areas after the bottom of the wedge. So it came into 5-minute close below. It broke out. I never saw it till it was down here. I saw it come back to retest the zone. It came up with the blue candle, hit this bottom line. I took it short. Here was my fill. And so I'm in this trade now already. And I'm looking for a target down here about the 2143 area. I think it's 2143 is what I was looking for, somewhere
Yeah,
around this
my
area.
my target's a little bit longer.
Yeah.
I'm looking at least uh what are we looking at? USD CAD, right? Yeah, okay, I got
Yes.
the right pair. So 1.3240 to as far as maybe 1.343.
Yeah. What I did was, let me just explain this a little bit
My
here.
my
I
stick
did,
was bigger.
I drew my stick from the B to the line, and you
Ah,
probably went from the A to something else.
not that much longer. Let me see. Excuse me, my
And
voice is shot.
I went from my B. I like taking this about the middle of where between the A and the D, wherever the B sort of hits. I like to use that as my reference. And there's a lot of different ways of doing it. But what I
There
liked
is.
about this one was that it came, and if you pull it right here, it goes right smack dab to the 55-minute blue fib line for the first place.
Yeah,
And
but
then,
we drew our wedges the exact almost the same. I didn't use the low like that big red candle that you have. I went a couple candles
no,
back.
I went to the line from the A to the, I went from the B and just straight down to where the wedge, the trend line was where I went.
Huh. Let me see here. Okay, keep on going. I'm gonna see if I
Okay.
can.
And
Yeah.
anyway, and what was interesting about that distance was fell exactly right on this blue fib line, 5-minute fib line. And the other thing I liked about it, then when I went over here to see where this fell with the other from the up move, you can see that this is the origin of this up move. Now, actually, this was the origin all the way down here. We had a nice strong rally. This is on a 1 hour chart. We had a strong rally, not a single red candle in that whole thing. Here's our basing. So here was a rally, base, another rally all the way up top, and then we had some back and forth, a lot of wiki action right up in here. So, but anyway, once it came back down, this is my target. This is if it breaks through here, that is heading on down to this area. This will be the next area that I'd be looking at. So I'm just going to clone that just so for another reference. This could be a really nice little trade. And I'll just clone this right down to the bottom of this wick and probably take it to the body of this red candle. And that'd be my next demand zone. So anyway, this thing has a
Okay.
lot of room to the downside. And then there's another reason why I have a target here for 3243, and that's would be more of an entry to the up move, and that's based on something else that we'll discuss at another time. But right now we're looking at the wedge. We're looking at the stick in between the wedge to find a target, and that's where we are right now in this trade. Do I have any questions at all before we get any further into this thing?
No, I like the 3238 better than my 3240 because you got that that works
We
out
got,
nicely.
yeah, we got the fib line. Yeah, I like
Yeah.
that fib line being there.
Yeah, I do too. So I'm gonna put
So,
my target. I'm gonna adjust my target.
so that's basically what we have. So right now I'm in this trade. It was what's been interesting is lately when we've been getting these wedge alerts, is actually breaking out on the alert 15-minute alert candle, which is right here at the 7:15 mark. If I come over here to my 1 minute, you'll see
Now,
that yes,
sorry to interrupt. Leslie's saying, can we see the indicators, please? Leslie, can you just let us know which indicators in particular you're looking for?
yeah, that's a good question. We have several of them.
Oh, she sees them. Okay.
There's
Sorry.
here's the fit. These are the 5-minute fib lines right here, and we've got a blue, the green. Here's the red, and this thing broke out right at the other blue. If you see right here, the light blue line right here. This is our 5-minute fib range. This is our 21 pip range right in here, and you can see it's breaking out of this range, and then oftentimes what you'll see it's going to go from the blue line to the blue line. It'll bounce around between the red and the green. This is really like the middle of that Fibonacci range on this Actually, this is on a, let me double check, see what, just on a 2-minute chart. These are 7 pips apart right here. The blue to the red is 7 pips. The red to the green is 7 pips. The green to the blue is 7 pips. And come to think, Leslie, a question for you, Leslie. If you got your fib tools, put your hand up so I know, or put in the chat box that you did or you did not. I don't know if Anthony ever got those set up for you. I have a hard time getting hold of Anthony. I might have more luck knowing if he got you set up or not. And if you don't know where to find it, let me know. I'll show you where you would find it. You don't think so? You won't get in the email. What you're going to do, if you have the fib tools activated, and I sent the information to him last week, and I was hoping he got it done this weekend. But if you go to your chart where it says this little FX, if you look in here, you should see something under with my. If you type in under my scripts, if you type in Fibonacci price range plotter, it should come up, and you should have a little padlock here that's green. If it's green, that means it's unlocked, and you should be able to use it. If it's red, that means it's not unlocked yet. So just type in Fibonacci price range plotter, or the other one that you would be looking for is the let's see where was it? It was the RCS tool. That would be the
Relative currency strength.
Relative currency strength. Yeah, thank you, Matt. Relative currency strength. Type those into your search box and see if they come up with a green padlock. If they do, that means you have the tools activated. And if not, let me know so I can see if I can get a hold of Anthony and see if he ever got that taken care of yet. So we're still working on it, and we're still getting there, and we're not giving up on it. It's just been he's been really tied up with another project that he's got involved with that he just hasn't been available.
It's going to be an awesome trade, Al.
This looks like it's going to be a really nice little trade right through here.
Yep.
Nice strong move down. And I said, I'm looking for there's and the reason why I picked this map, by the way, is that this is an entry for a long off of a harmonic pattern.
Okay, I got it. Maybe we can start showing people how we kind of qualify a wedge.
Let me just show this over here, because this is something we're going to start doing more and more of as we go. This is what they call the harmonic pattern It's at harmonicpattern.com. It's a subscription which I've subscribed to for a while, and all I do is I come over here and it says US CAD 15-minute chart, and gives me all these different patterns of harmonic patterns, and that's a whole nother. Basically, harmonic patterns are nothing more than wedges on steroids, and these wedges that we're getting our alerts on are basically wedges. The best alerts the best wedges we have in direction to take them are referenced to these harmonic patterns.
Yes, because the likelihood of going from the C to the D move is very, very high.
And what we're trying to do is we're trying to get these wedge alerts at the C, and then if we have a harmonic pattern at a C, like for instance down here, if we had a harmonic down here at a C, we're looking for it to go up to the D, and that's our target. Here we have this. So this is like two different patterns. I mean, oftentimes you'll see several different patterns, but this will give you a choice of which one. This is the most current one. And where we're coming from the C area, we had our alert, and now we're looking to coming down to the D. Once it gets down to the D, we have this other one, which is down here, which is this bigger pattern's C, and we're looking for it to come down here and then head on up to the D. And that's why I'm using this, and it actually gives you an entry. It says right here, the entry on this one is once it comes down, the entry to go long is going to be at 3243 with target 1, target 2 up here. And so we're going to be using, I'm going to start using this more and more for a reference. But this is going to help us find our direction of the wedge, which way to go with it, and also help us find our targets.
Yeah, it's extra tools, right?
It's extra tools. Yes, Eva.
Leslie says that her padlock icons are red.
Oh, okay, great. All right. Well, it's not great, but thank you for letting me know so I can address that with Anthony. I'm going to try and get a hold of him again today and see if we can make some headway on this. Keep looking, Leslie, and anybody else who gave us your code, your login IDs for your trading view. Just keep looking, just like I just showed you with look, and once they get unlocked, those padlocks will be green, and you should have access to the tools. So just keep an eye on that, and then let me know when you get them, if because you may see it sooner than I get a hold of Anthony. This is a nice little move right here. Here's a nice little straight drop. This is a 1 minute chart, but
Look at that wedge. Look at
straight.
that 1 minute wedge out.
Yeah, now this one just sort of bounced, took a little strong. But this whole right here, here's a nice little wedge right in this area.
Yeah.
Here's a drop. Here's the wedge, and then we can measure this one out as well. We can take this from with this retraction tool, come up here to the high, come down to the low, pull this thing back to where the top of this section is right here, measure it, see where it is. That's about a 40% retracement. And if you get somewhere, if you usually get like that 38.2 to 40% retracement back up into this area, quite often, not all the time, but quite often, it'll fall back into your target zone. It's right here between the 78 and the 1 hour, or the 1-to-1 ratio. So this again would be the target zone, and you'll see how close that comes if this does get down to this area. So this would be my target.
The 62 was at the top there, Al, and it rejected at the top of the original, like inside that wedge, the original.
Inside the original. Oh,
yeah.
Inside. Oh, in here. Yeah.
Yeah.
62. Yeah.
No, the 30-minute 62.
Oh, 30 minutes. This one's the blue one right in here.
Yeah. So that's good.
That's another significant factor too.
Yeah. As it pulls away, that's a pretty big. That's a big deal for me.
Yeah, I mean, if you were watching this before you even got the alert, and you see where you got the alert, you see where it rejected the 62. This blue line right here is a 30-minute 62. It came up, it rejected that, and didn't close above it, didn't close above the upper wedge. And so that's a good area to possibly look at, maybe if you were able to. And we weren't able to because we didn't see it because we didn't get the alert. But if you happen to be watching this and you saw that formation, it's not a bad place to be taking it short. You have the RSIs are up at the top in your 89 area.
Yeah.
You have the rejection of the 30-minute. You have the rejection of the higher trend line. And now you can look for the bottom for it to, and then if it breaks out of the bottom here, that's a pretty good indication you're going to be on the right side of the move to bring it on down.
I would absolutely agree. And I don't, the other day I took a trade within the wedge, and some of you saw that. It ended up being a bad trade. I ended up working my way out with like a $3 loss. But yeah, it wasn't a great trade at all. And I'm going to work on my additional criteria for taking the trade within the wedge, because really the extra 3 or 4 pips is not worth it. Not to be stuck in a trade that's minus 2% of your trading account. It's not worth it.
The thing with the wedges is we get the wedge alerts, and they're exceedingly accurate as far as being in a consolidation zone, because that's all they really are. These are consolidation zones from a higher time frame, a bigger move. You don't always know which way they're going to break, and so part of the goal that Matt and I have is to learn and to be able to teach the distinction of whether or not to take it long or short based on other factors. And this is where technical analysis comes in. Just because you get an alert doesn't mean you really know which way it's going to go. And if you're going to be a trader, you need to learn the technical analysis, and you're going to have to rely on some other tools to help qualify certain trades. I mean, sometimes it could be just a moving average or an RSI, but oftentimes, the more qualifiers you can get lined up on a certain level, what we call odd enhancers. The more odd enhancers you get to line up on a breakout, the better your odds are of having a winning trade. It may be moving averages, it may be RSIs, it may be the RCS tool, it may be a fib line. But you learn to see how many of those factors line up all at once. In this case, you can see where we had the moving averages hooked that came back, that all crossed over inside the wedge, all in the right direction. It broke the bottom of the wedge. That's number two. You had the bounce off of the 30-minute. That would be number three. And you had the RCS tool come over here and saying, well, this thing wasn't real distinctive here, but we did have all the moving averages coming out of the same direction. So these are all qualifiers. And when you get the more you can get qualified to line up, the more likelihood you are to be able to hit your targets, or to know that rather than getting stopped out and having reverse on you. And as we go along, this is a constant work in progress. We're constantly learning. Matt and I are, even though we may be teaching this, we're still learning how to qualify these things so we can pass that information on to you.
Yeah, because the more we learn, the more profit we put in our pockets too, right?
Well,
the more
that's the theory.
it helps us increase our win rate. And so it's kind of a little bit selfish as well, because we just want to be the absolute best that we can be. By doing that, the whole room is going to benefit from it.
And one thing is that we have some tools that we use. We're going to use those to qualify, and we're not asking you to buy
Go
them
and get
or
them.
anything
Yeah,
like
don't
that.
go do that.
But all you have to do is show up in the room, and you'll be able to take advantage of some of these things. We can't show them to you particularly on some things. Some things we're obligated not to show because it's proprietary. But that doesn't mean we can't share the information that we gained from it and just say, okay, here's what we're seeing, and based on some other factors that we have. And that's about the best we can do here.
Yeah, that's the full disclosure in a nutshell. Just like to note though that you don't need all these fancy indicators to trade wedges. You really don't. If someone wanted to do pure price action and wanted to draw the wedge and put a stick at the bottom and wait for a 5-minute candle close with 2 pips in your direction, you can take that and go for 10 pips. And you can do that every day. Every day, all day. Same thing over and over. You're not going to win every trade, but you're going to win a whole lot more than you're going to lose. And we're almost done our trade, guys. Let's watch it tag our target.
There's our 6 and 6 pips. We're looking at if this tags my target area, I'll be out of this trade. I'll keep my target down here in case it breaks. But if it tags here and installs, then I will be out of this trade. I'll just click this thing off and be done with it.
Yeah, because I'm not a fan of that blue line. I think that's where we're going to have a pullback. So it's going to retrace. It's going to form another wedge. Anytime you have a big move down like that, you're going to form a wedge because it's a consolidation pattern. And this one will be a continuation wedge. So you see where there's a 1-minute wedge that it broke out of, where we thought that it could have got a little bit of heat.
Well, I'm going to put this right there. That's going to give me an 8-pip profit.
Yeah, and I'm not ready to exit the trade yet because of the way that candle is looking. This is going to be the wedge that is going to form, and then we're still going to come down. So don't worry about that. In the next little bit, guys, we're going to be on fire where you're not even going to... It's going to be so good.
So here's my blue fib line. It's got to get through this green one first. It got through the red. Right now, it's past the red one, past it, coming back to recheck it. We call it pass and check. And then it's going to come down, retest the green, probably pass the green, come back, check it, and then may come down to hit the blue. Or you may be out of the trade by that time and say, thank you very much. It's been a great trade day.
Yeah. But I'm not worried about that yet. It's gonna.
And we do have another alert on the Aussie US at 7:45, which was that was another half hour ago.
That was descending.
That was descending. I'll tell you. Let me draw. Let's see.
Well, I can go do that. You can. Because people are probably in here. People in that trade.
Yeah, I'll keep on. I'll stay on this one since we probably still have some people in this one.
Yeah.
You can go draw that one out and let us know what you see there.
I will. And it's a miracle. I've got my AIRIS notifications working again, so that's great. I'm excited for that.
Oh, I didn't realize that you didn't have it.
No, I was kind of going blind. So, but they're working now, and I'm happy for that. So let me save this page, and now I can go do some serious back testing today. So after our session, what time does our session go till? Like 10 o'clock or
Well,
something?
I have to be out of here at 10 o'clock because I have an appointment at 10:30 today. So we'll go till 10 o'clock today.
Okay. I think that's a good idea. So let's go check the Aussie. Oh yeah, my time zone's wrong. That'll screw things up.
And my harmonic is saying this may be going long, just so you know.
Okay.
If you concur, let me know if you concur with that.
I say this is just a pullback, and we're gonna keep on coming down.
Okay.
So it might turn around at 1.3255 and come down, but we'll see.
So
It's
right
not.
now,
It's nowhere near a place where I'm concerned about it turning around. I'm not.
do you think it's going to be a short?
I still think it's short, and right now there's nothing that will change my mind on this.
Well, we'll see who. This will be good. This will be good.
Yeah.
We'll see who prevails on this one.
Yeah, there's nothing that'll change my mind on this one. I'm not seeing that. Because this is just making a bigger wedge. It's a bigger move down than a 5-minute wave on the way down. It's actually like quite a significant go there. All right, let's go I'm going to go take a look at the Aussie.
I thought you were talking about the Aussie.
No.
Oh, I thought.
No. I was still talking about the CAD.
Oh, okay. Yeah, that I agree.
No.
That I agree. No, I'm talking about the
Okay.
Aussie.
No.
I'm talking about the Aussie.
Aussie's going up. Don't worry about that. At least at the lower time frame. So let me see if I can draw something up. I think we're at the top of the wedge based on what I see here.
That would be what I would. That's what I would say as well.
Yeah, let me see. I didn't draw the wedge yet. I was distracted with my open trade. All right, let's see. This was descending, huh?
It was descending, yes.
Okay. Yeah, we're breaking out of the top and it's gone. So let me see if there's an opportunity. If you're not in this one yet, I probably wouldn't jump in. I am not taking this one because it's too late. Nothing like trying to chase a trade, guys. Last thing you want to be doing.
Let's see what I am going to.
There might be an opportunity to take this one on the short side because you got a nice W. And if it reverses around 71.75, then we could maybe look for entry. But this breakout of this wedge here, that would have been your target for sure. It would have hit.
Let's see, that was at 7:45, I believe. So let me take a look. Let me draw the US was at 7:45. Yeah, it was at 7:45. That was a while. That was a little while ago.
Yeah, it's okay. It took a while to break. It was
AIRIS there. We're still looking at the US CAD. I'm showing you the US CAD. I'm going to draw the Aussie on another computer here, another monitor. And seeing it bouncing off of a 62, a 30-minute 62, and a 15-minute 62. It just bounced off of that, the Aussie did. So that's not quite ready to take off, but it's certainly is working in that direction. If it closes above the 15-minute 62, I think I would be apt to take this one long. You have to pull back.
Yeah, it needs to pull back again, but let's see if we got anything interesting.
This one's taking a little bit, it was a little bit of a, this is the part that you never really like. You don't like seeing it come down to your target, come back and come right back to where you got in, and be patient enough to wait for it to come back again.
Yeah,
this is where I struggle. I personally struggle with this. Is I just take my profit and say thank you, maybe come back and take another shot at it when it comes back up. But I like to lock in that profit early on.
Yeah, I still believe it's going to go down.
It's still respecting the 1-minute 62. Let's go to the 5-minute chart.
I don't think it'll be close to the 5-minute 62. Let's see.
And the 5-minute is right here. Here's the 62 on the 5. It just came up and kind of, you can see where the 13 period moving average right here. It got some wicks up into it, never touched the 62. And now it's coming back down. And right now you can see there's a little bit, if you were to take a secondary trend from like the D to this point and see if you can find a trend line that you get that third hit on. And my guess is you're not going to get the third hit, but it will be, let's see what this looks like from here. This is on the 5-minute chart. There's the anchor. Here's a hit. Here's a hit. Here's our third hit right there where the arrow is. That validates this trend line. Now we can just follow that one on down and see if it comes down to our target.
Al, how powerful is the harmonic scanner from? That pretty much gives you access to TradingView, doesn't it?
Well, the harmonic scanner.
Yeah, it's based off of TradingView.
It's based off of TradingView chart. That's correct. And here's what it's showing. This is on the Aussie US that we're talking about, 15-minute chart. And it says it's got a double bottom. So you see, remember we talked about M's and W's. Here's the W. Also, look at this. We have divergence here. We have a low. We have a lower low. And I'm going to guess if you have the RSIs on here, you'd probably have a higher RSI on this. And so here's where the breakouts come in. They're showing the entry at 71. Wait, I can't see it here.
35.
71.35-ish.
No,
71.67.
67.35. Yeah.
That's the entry, and here's the target up here for at 71.90.
But they're not 100% though. They're not 100%.
But also you can see where it's coming off the C heading to the D.
Yeah, it's a shark.
On a shark scan.
Yeah.
So this thing's basically looks like it made the bottom and now it's working its way up. Right, but right now, if you were to take it right now, you're looking at a break of this area, but you're also in the middle of the range between your C and your D, which means this thing could still come on down. It depends on how much. That's where you want some other confirmations before you would take this break. And the problem that I see with this one is if you go to your normal chart, you're going to find out that that's hitting that where it is right now. It's hitting a 30-minute 62, and it's hitting a 15-minute 62. And with that, you're going to get some sort of a rejection. But once it breaks through that area, I'll show you what I've got on this other chart here. We have this here's a drop, here's a base, here's a drop, here's where you had the divergence. Look at the RSIs. You can see. Let me get this onto a different chart here. Let me load this one up. Let me get the
Just
right-
waiting for our nice little break to the bottom again. It's creating a little bit of a bigger wedge than we had expected, but that's okay.
It's New Zealand, Aussie,
You're on the
US.
Kiwi.
Yeah, I know. I need to get this thing changed over here. Take all this stuff off. But you can see, like right now on this Aussie, it's coming right on up to the 62 on the 30-minute 62. On it crossed the 5 minute. Here's where the double wedge was, right here. Here's the low. Here's a low. Here's a lower low. There's your divergence right in here. Is breaking out the top of the 5 minute 62. Put this on a 15-minute chart. And you can see it's just bouncing right off the 62 off of the 15. It's got to get through that first. And then once it gets through that, then it's coming on up to this area. So right now you still might have a little bit of a pullback. I don't really like this as a breakout because it's going to be breaking out right up into this area. It doesn't mean it's not going to, because right now the moving averages are in the right direction, except on the 15. The 15's got to get that. You're going to have to get some consolidation on the 15 first before it's going to break to the upper part. Back to our CAD trade.
Getting a little bit of heat now.
Let me get my CAD trade back up here. US CAD, US CAD. Here we go. Did I lose it here? Did I lose my join?
I think that might be a different broker.
Oh, here. Well, here's the no here. Well, this will work. This will work here. Let me move this out of the way. It shouldn't be a different broker. Yeah, here's my chart. Here's my. What do I got here? I'm on a different. No, this is the same one. This is our CAD trade here.
Yeah, because you were mentioning how the wicks passed the
Yeah,
but they
yeah.
didn't.
The wicks came up. I lost my wedge though. I lost my wedge join. Somehow I did. I must have it on a different chart. But right now we're still, like I said, we're still in this trade. We're still looking for that target. And if I can get that back again, that'd be great. I just have to redraw it. This is from an old wedge back over here.
Yeah.
Maybe just redraw this for everybody in case somebody may have missed this.
It's at
This was
7:15. it came
US
in.
CAD. It was at 7:15.
Yes.
Thank you, Christine.
You're welcome.
7:15. So we're going to go right to 7:15. And I'm just going to, my higher trend line is going to be from this pivot high, which was a pivot high from yesterday.
Yeah.
To here. Here's a hit. Here's a hit. Tuck it in. Here's our hit. So this validates this trend line. We have a wedge. So we're going to draw the wedge. Here's where the alert was. So I'm going to take this. It was ascending. So I'm going to take this low. Go to this high. Come to this low. Go to this high. And actually probably can take it in a little bit closer here. Take this one, move this one over. We had the break, and we have our targets are down here.
Yeah.
And we drew the wedge with the, actually I had the A over here, I believe.
Yeah, you went a little deeper down.
This one, I
There.
think I went to
Yeah.
that one. And we have so I'm going to take the stick, make the stick from.
Because your scale is at 2 pips, so it makes your chart look really big compared to where you were at.
Okay, let me get my stick here someplace. There's my stick. And what we're going to do is we're going to take this, and I'm going to take it from the low of the wedge. I'm going to run this stick all the way up to the B. Then I'm going to take my stick. I'm going to take where the breakout was. And here's where my target is down here. But we also found that there was actually, if I look at this is an area down here that was of significance.
Yep. And that's almost where that target is.
Yeah. And we have this, this was the beginning of, a nice strong red candle coming down, rejected it, came back, tested it, took it on up to the B, and now it's retesting this level down in here again.
Yeah. So I've got, I decided to take a second position on USD CAD as it came up. It gave me kind of an option to put one in. This is not a recommendation for you to take it. If you're already in the trade, just kind of, it's just that we're getting a little bit of a bigger pullback than what we had anticipated.
You see you have your high, here's now we are getting a little bit of as I believe I was using this D for
Yeah, for a trend line.
for the trend line for the hit. Let me get the trend line on here. This was the first hit. Here was the second hit. Now the thing I don't like about this right now is we just got a breach of this trend line.
Mm-hmm.
If it breaks above the moving average, then I'll probably have to exit the trade and say I should have taken my profits down here. But right now the trend line is still, or the wedge is still valid. You're still making lower highs. Here's a high, lower high, lower high. Until it breaks this high, it's still in a downtrend.
Yeah, I'm still of the opinion that it'll come down. So we'll see what happens here.
I don't want to see it close above here. I don't want to see that.
Yeah, that would be a,
because if it does, it's going to come up and
warning
retest the wedge
sign.
and maybe break to the other side.
Yeah, that would be a warning sign. Let's find out.
But even so, even from where my entry is, and that wasn't what I call exceptionally good entry. I'm still looking at 4 pips to the upside right here to this point.
Yeah.
It comes all the way up to the wedge. We're looking at 8 pips just to the bottom of the wedge. And you can see that this wedge is getting further and further away from you as it goes. So now if you're getting strong moves up, if it comes right up into this and then gets rejected, that's going to be your second entry.
Yeah, I've got it's bouncing off of something right now. Just trying to figure out what line that is that it's bouncing off of.
I'm going to draw this factor here. Move this down 2 pips.
Oh, that's my wedge is a little bit different than yours then, because right now it's bouncing off my wedge. So let's see.
Let's see. This is let's see. Where's my? This is at. This was my entry. Entry to sell. I'm looking for 2 pips from. I found my cursor here. 32.56 to 54. That's right about in there. This is the little zone where we would have taken the trade in the first place, where we got the break of the wedge, got into it. Now we would have gotten our 7 pips from, if we got in at here and all the way down here, you've gotten 11 pips. You could have gotten your 7 pips out of that down move.
Yeah,
if you took it right at the break of this, when this thing closed.
Which I had the opportunity to take that at the break of the close. I could have exited, I just didn't. So it is what it is. Now that is a real pain in the butt because it's still coming up.
But you still have this 30-minute 62 is going to have to get through that.
Exactly.
It's going to have to get through this area. I would be more apt to take it short at this area.
Yeah, because I don't see it breaking that 62. But as you can tell, sometimes we're wrong.
Coming up, starting to get a nice little hook here.
Yeah. not to get overly complex, but this run that we're experiencing right now is actually the end of a really big, like a higher time frame move. So understanding that a 15 pip pullback is kind of acceptable because it's like a 4-hour cycle that is finishing up.
And just remember that the more it more it pulls back, the harder it is going to snap. The deeper it
Yeah,
goes,
yeah, it's still winding up. We never made.
It's like
Go ahead.
pulling the bow of the arrow. You pull it back, and then the more you pull it back, the harder it's going to fire off to your direction.
Yeah.
Now it could work against you because it could, the bow could break.
The bow could break. The bow could break, and you could get hurt. But I'm willing to take that risk. I'm not.
And actually, if you got in here, this would be a very low risk trade to take this thing short up here. If it breaks the top, you're going to be losing. You would be taking
5 pips, maybe.
You might get your 7 pips at this point, but again, you have 7 pip loss, 7 pip to a possibly 19, 20 pip gain on this one, just to get back to where it was.
Yeah.
Now, what about the RCS though? Look how strong the US is to the CAD. Would you still take it short with it showing that way?
That's a good question.
5 minute. What's 15 say?
Well, right now we have we only have a 2 pip spread on the US CAD on this one right now. We have the dollar is showing stronger on the 15, the 5, and the 1. I would rather see this flip over here before I took it. I'd rather see the CAD and the US switch. And I think you'll see a lot of times you get to these extremes, you'll see them flip pretty quickly.
Yeah.
Oftentimes.
Yeah, if you're not watching, you'll miss the flip.
Yeah, I would not take it short just yet. I would like to see this thing flip to the CAD being stronger to the US on the 1 minute. Then you start seeing that where it's starting to reach the end of the pullback.
Let's see what's going on.
We'll put this on the 1 minute here. Like I said, the fact that it hasn't reached the 30-minute 62 coming right here, you can see that little blue line right in there. I still like the fact that I still look this more of a short than I do for a long. And it still hasn't broken into the wedge yet either. It came right up to the wedge and bounced off. I do expect it's going to come up here and retest this upper area.
Mm-hmm. Even from my worst entry on this one, we're still only like seven pips against the person. So just because the entry wasn't ideal, it's not worth fretting about, I think. Let's see. Oh, we got news coming up. It's only yellow. It's orange,
that's
right?
Yeah, that's right. There is that. What time was that news? I saw that here someplace.
9 o'clock. Yeah, 8:55. It's only orange, I think, but you got red.
We do have the Fed chairman speaks again today at someplace. I saw that.
Yeah, you got 9 and 10 o'clock. You're gonna have some stuff going on. So, Al, maybe this is the 9 o'clock pullback, my friend.
Yeah, we've been seeing an awful lot of major action just before 9 o'clock or right at 9 o'clock. You see an awful lot of big moves. That happened yesterday. We had the nice little run off the British US. I believe it was right around 9 o'clock.
Yeah, there's a lot of stuff happening on the other on your other screen now, so that's why it keeps on coming up a little bit. But you'll see that it's just the end of something bigger, so it had to come up. It just came up like 10 pips higher than what I had anticipated. Now we're going to get a little wedge at the top there at the 1 minute. So it's forming a little wedge inside the wedge. Or yours is outside of the wedge. Mine's actually inside. So I think we drew ours a little bit differently. Let me see. All right, we're bouncing off the bottom of my wedge right now. So where your red line is, that's where my bottom of my wedge is. So we're off by about a pip. And to me, that's not worth worrying about.
This thing does break the top of the wedge here. We're looking at it going significantly higher.
Yeah.
My harmonic scanner do another scan.
Oh yeah, it spit another one out.
I'll show you what it just did here. It has a C down here now. This is a relatively new scan.
It's a bat.
It was the one down here at the D, looking for the D. We're looking for that D, but this
Yeah.
one's coming up with the latest one now is we're getting looking for the wedge here. If it breaks the tops of these right here, then we're looking to head on up to the 133.35 area.
Yeah.
So we're kind of at a deciding point here.
Let's check it out.
This was a strong move up. The wedge did hold. Our entry zone did hold. So we do have the flip of the moving averages, although we do have the 30-minute is still holding. We did get the close of a strong close above the 5-minute 62. So right now we're having a look at like a rally. Here's a little basing. We could get another rally. So but we did have the hooks up. It came up a little bit lower hook. And so it's still making, in spite of all of this, it's still making lower highs. We did get the break of this. So this one, it did break this little pivot here, but this one's still holding. Now, what you could do is you could exit this trade and try and maybe take another entry here or cut your losses down here and wait for the breakout to the top. This is a tough one to decide which way to go. It's giving us a couple different signals here. So right now it's just trading in between this range right in here.
Yeah, it's not doing what I like.
But it's respecting this. It respected this bottom. It didn't break the A. It didn't break the B. So right now it's trading inside this range right in here. From here to this area. This is the box it's in right now. Until it breaks out of this box, it's not going anywhere. It's either hold your ground and maybe be looking at taking short up here, taking long down here until it breaks through one of these target areas.
Let's see. Probably going to get a nice bounce off the 62 then. If it breaks the 62, I'll close out.
I'm going to just remove the wedge because it's already challenged the wedge.
Yeah.
It looks like I just got stopped out on this one here.
Eesh.
Which is okay.
Let's see.
But right now it's still respecting the top wedge. And here's going to be a deciding factor right in here if it's going to break through this 30-minute.
Let's find out.
This is pretty much where this whole thing started. Where's my blue fib line here? My blue fib line is up here. This is on the 5 minute.
All right, I've got too much stuff on my charts, so let's see.
So I'm going to take this one off. This one's been breached, so we're no longer, that one's not valid anymore. And this is one reason why I say don't hesitate to take your profits early. Sometimes you wait for that extra 2 pips and you give it all back again. That's why I say go for your 7 pips, take it and be thankful, and then wait for the next trade or next opportunity. How's our Aussie doing?
That's a good question. Aussie is down, so it's still meandering around the wedge for the 9 o'clock hour. So let's see what happens. Let's see what happens. I will stay in this trade until 9 o'clock, though. It still gives me some time to work it out. We'll see.
This would be the area that I'd be looking at if it closes inside. I'll find where my I wouldn't want to take it long unless I got to close inside this box here. That would mean that we get a close on these higher bodies. It could come up and break the trend line just to wick up, just like it did, and give us another hit on the trend line.
Let's see. Let's see. 3 minutes.
I do like this for a short here at this point in time.
Don't know.
But I want to see on the 1 minute, I want to see the moving averages cross over and confirm it. I'd like to see a consolidation of the moving averages up in this area.
$58. I'm going to be doing some back testing today, Al. So we're going to, if you're available for the room, maybe we can figure some stuff out if you have some extra time.
Yeah, I'll be going for a couple hours. I'll probably be back after, well, probably before noon. I'll be back, and we can work on that together.
Yeah.
Right now we have a little bit of a channel going on right here, and we'll see if this breaks up in this area.
Mm-hmm. Did it hit the 62 yet or what? No, not yet.
Not yet. Hasn't hit the 62.
Still waiting on that.
Let me go and put that on here. There's the 30 minutes.
Mm-hmm.
There it is right there.
Just below that trend line.
Yeah.
We have
like
another
this
alert. I'll go check it out.
I like this little
Cool.
channel we have right here. It has a US yen ascending.
Wow, you were zippity zip there.
Oh, I have it on the monitor.
He's only got like 6 monitors there.
Yeah.
Yeah,
Like,
that's why I struggle when I'm on my laptop and I have one, and that's why I struggle.
took away my one job.
I'm gonna have to practice my laptop techniques as I was having troubles yesterday.
Let's go. Take this thing down.
Trying to get a crossover. If we get the break at the bottom here, I'll be back to try and enter this thing again. We got the flip of the Canadian. That's the Canadian flip. The dollar is still strong here, but we did get the flip here on this pullback with the rejection. Now, it hasn't confirmed yet. I'd like to see it close below this bottom trend line, close below the 62 on this 1 minute. But right now we're still hanging above the 62, and right now we're in this 30-minute and the 5-minute 62s right in this area. Right in here, we're having a little bit of a issue.
Yeah, issue would be a understatement. Let's see what happens.
But spacing, getting a little bit of a basing area right in here. Here's the little, it's forming its own little wedge in this.
Yeah, that's ugly. That's not looking good. We're looking for a bounce off the 62. If it slices and closes above, I am exiting all my trades. Then I'm going to go revisit why that trade failed.
Well, and this is what in essence though, Matt, it didn't fail because we got our 7 pips. And this is the thing is that do you want to go for the longer runs or you want to just grab your 7 pips and go? And that's where it's a personal decision, personal preference, and part of your trade plan about how much do you want. Do you want to go for the bigger runs and risk getting stopped back out and maybe having reverse on you? Or do you want to just go and lock in your daily bread and then say, I'm just going to wait for the next opportunity?
Yeah, that's the that's the better game plan, but greed gets you, right? Because how much deeper is it going to go? Can I make that extra 0.25%, or am I going to end up having to take 2% loss?
Right.
So
and I'm really of the mind where I've let an awful lot of
I've got to get there.
good runs go, but I've also done very well just locking in that 2% on those 7 pips.
Yeah,
It's really not until I start going for the bigger runs that I start running into problems, because we're getting a lot of these reversals. We get a lot of these reversals all the time, especially on these lower time frames. We'll get these reversals, and if it breaks to the top here, you might have 7 pips from at the upside 32.84
right.
to the break here of 70. There's 14 pips here between. If it breaks on the 15, here's your target right up here on this anchor right up on this part. So here would be your target. If it breaks the wedge, if it breaks this trend line, you've got your 7 pip target up to here.
Yeah, that's true.
And then a lot of times, if you can't get more than 7 pips on the pullback of the break of the wedge from the wedge alert, oftentimes if you don't take that and make that profit and it reverses to the other side, this is usually going to be the bigger move.
That's a good point.
Now, still making lower.
Overall, still lower high, right?
Well, it still hasn't broken the.
And this is a third hit on my trend line on my 15-minute. I've got
here's the anchor where the egg is. Here's the hit. Here's your 15-minute.
Yeah, I've got a trend line there. It gives me 3 hits on the 15-minute.
But no, it did close above the 15.
Yeah.
It hasn't. Once you get the break above this area right in here, then you're looking at this as the target. And see how much room there is here. If we get a close above this point right in this area. This red candle, we get a close above this red candle right there, if I can get it to lock in here. So we get the close above here. Here's the zone that I was telling you about, where we have, here's the anchor, here's the trend line, there's the trend line. If we get a close into this area, do we have our room to our target up here? This is the last real wick before it hits up to this area. So we get a close in here, do we have 7 pips? From here to here, there's 9 pips. There's room there's room. But we gotta get a break, we gotta get a close above the trend line. The purple one.
Yeah, I've got a different trend line from your last hit on your purple one, and then I just did the down.
This one?
Yeah, and I just connected the 3 tops, and so I actually only connected 2 tops, but it had 2 of the pip bounce on the 3rd, so that's interesting. Just gonna see if there's something else we can.
This can be a trap right here. If it
Now
comes
you
up
tell
in
me.
here and it comes up and can't close, that's your trap. That's a trap. I'm going to say trap potential. In fact, I'm going to draw. This is on a 15-minute. Let's get back to our 5. What time is it? 9:07. This was the before 9 o'clock move right in here. And now we're looking for that reversal. I'm still looking for that reversal. I still think this is going to be respected here.
Excuse me. I have a phone call. Give me a bit.
Okay.
Al, do you want me to take a try at that US yen? I mean, take a look at it?
Oh, yeah. Let us know what you see there, Christine.
Okay.
Where's Ruben today?
I haven't heard from him today. Normally, he lets me know if he can't be in the room. Al, did you ever figure out your 888 room? The settings on that?
I think what's happened with that is that Zoom has put in some protection for almost all. I think they just built in some protection to where we have to sign in and admit people coming into the room. I think is what's happened. I don't know if we can override that or not. I mentioned it to Brian, and he's going to look into it because he couldn't even get into his own room.
Really?
Yeah.
I was wanting, Brigitte needed my help on the weekend to sign up a customer.
We can, I think what I can do, I'll show you how to get into the room, Eva, so that you can log in if I'm not around.
Okay, later
Well,
on, you come
yeah, we'll
back.
do that later. Yeah, we'll do that later on this afternoon. How's that?
Sounds good.
When we get done here, I'll open up when we get done here, I'll open up the room so you can get in, and then anybody who wants to go in there you can work with them while I'm gone here this morning.
Yeah, for sure. Give me a little bit. I got a phone call. I will step away, and
Okay, we're good.
then I'll be back.
I'm just watching this thing consolidate here and see what happens with it.
Yeah, we'll see. We'll see if we get this one. Anyway,
I'm still
I'll
looking
be
at the
back in a bit.
consolidation. I'm still looking at this consolidation and possibly maybe another retest of this. We still haven't reached the entry area where I was looking at for the entry to go long on this, and that was at 3243, which is 30, which is right here with the yellow line. I'm still looking at this. I'm still looking at this as a potential target zone. Now we did get a few other scans since that was the key one, but it does have some other possibilities here. So we have the markets going to open up in another 19 minutes. We'll have the U.S. markets are going to be opening.
What do you think while we're watching? Should we take a quick coffee break?
I think that's a great idea, Eva. Yeah, let's take a quick break, and I'll just keep my charts up. There's nothing much going on right now, but I'll keep my charts up even though we're on break. And you're free to go and grab a cup of coffee or adjust your biological needs.
All right, everybody, see you in a couple minutes.
Okay. Meantime, I'm going to look at the U.S. yen here. Let's see, take a look at that one.
Yeah, because I'm not that I'm having trouble. I'm just not. I'm having not seeing it. I'm having drawing troubles.
Okay, well,
First,
sometimes I'll tell you, sometimes you just don't see them either. Sometimes these wedges are just like, no, I'm not seeing it.
I thought I did, and then now I wanted to recheck what the if it was ascending or descending to make sure.
Okay, so right now it was ascending at 9 o'clock. Let's just draw this one out here.
What is this? Do you know now it's saying that I don't have any active areas. I put in a note. I mean, I just had it a few minutes ago.
There's no active areas.
Right. I've been reading what they've been. And then they charged me like 110 for AIRIS. So I put in a ticket yesterday to say that I have the Alexander. And they said that they'll be rectifying it. And now, like just this minute, all morning I've been having alerts. Goofy. It's asking me to buy now.
Oh, jeez.
Yeah, there is no active subscription on your AIRIS trade notifications on this account.
You're kidding.
You can create a subscription now and start receiving alerts.
Sounds like there's a little mix up with the back office there somehow.
Yeah. All right. Well. Okay, I can't help you with that anymore for now.
Okay. Well, here's the yen pair. Here's the alert was at 9 o'clock ascending.
Mm-hmm.
Let's go to our 15-minute chart, and we're going to. Let's see here. We've got ascending. So here was the alert ascending. We'll start down below.
Okay. Yes.
We'll start down here, and then move it up to. There's a possible hit here. Come down to this one. I'm looking. I took it up to that. I took it up to here because I was looking at this as the hit.
Sure.
I'm gonna take it up one little bit further and see if we have a trend with that.
We should go like a candle before rather than
Yeah,
like,
I like
up.
this one a little bit better. I like anchor. Here's a hit. Here's a hit. Here's the wedge. Here's the alert. I do. Now this would be. Let's just say this. I'm going to look at. It was ascending. So here's what I'm going to do with this one. I'm going to take this D over here just before the alert. I'm going to pull this one down. Get the top one ascending as well, and then looking at this as my major trend line that just got broken.
Oh, okay.
So if we have this trend here
Mm-hmm.
to here to here, anchor, hit, trend line. There's my arrow. This one got broken. This is ascending. And now the question is, where is it going to go? Let me take another look at something else here. US yen.
I can't believe this.
Not really liking that. We did have the break, close above, close where the B is ascending, broke this wedge, and now we're looking at possibly a break of this one to go up higher. If it breaks the top of this, then we can use this as a trend line to follow it through. Let's see if we can come anywhere down here to see if we can find anything for. I'm going to take this one from here for a major trend line, higher time frame trend line from there to the A. There's our higher time frame wedge. We get broke out of the top of it. Let's look at it on a 5-minute chart. And let's draw our 2-pip trend from so I'm going to go from, let's see, that's, where's my cursor? There's 69.5 to 71.5, right about there. Here's our entry to buy. It's done that. I think we can take a buy on this one. We have the hook. We have all of our RSIs are coming out of the 40-60 range. Dollar is stronger on the 5-minute. Let's see where we are on the dollar is strong. Dollar is the first currency of the pair. Dollar strength on all three. This one's not real convincing, but it did break the trend. And
now you have two. It goes back between 2 and 3 on the 1 minute.
Yeah, but now we've got 3 on the 5. We did get the break and close above our area right in here.
Yes.
Let's see where our fib lines are here. Here's our blue. So it's broke above the blue. Should be heading up towards the green. That would be the target, which is right about where I have my target up here. And we'd go for our 7 pips. Our 7-pip target would be well, let's just do it this way. Take profit 7. I'm going to say stop at let's say stop at 10. See where that puts us. Stop us down here below on the other side of the moving averages. I can probably even tuck this in a little bit tighter here. I'll put it right about in the bottom of the wedge. If it comes back that far, something's not working as planned. Right now, our moving averages are in the right direction. We have the green, yellow, purple moving to the upside. That's on the 5-minute. We have moving averages on the, where is it here? Let's see. Moving averages. We have green, yellow, white, which is in the right order on the 1 minute. And on the 15-minute, we have the moving averages are in the green. This one hasn't quite flipped over yet. The green and the orange have to flip over.
Mhm.
Other than that, everything is still in the right direction.
Yeah, I had drawn my wedge a little bit differently, but
And,
I see the way you're doing it, you know?
yeah, I mean, there's, like I said, there's a couple different ways of looking at these things.
Yeah.
Now, just because I draw it one way doesn't mean it's, I mean, it works, or I mean, it should
Sure.
work.
Right.
But there are other ways of looking at these things.
Yeah. Like
Uh,
I had
you know,
my B, like kind of where your arrow mark is.
right, yeah, and
And then
that's
D,
not
I moved,
that's not a bad way of doing it.
and
Because
then
that's your higher high, here's your low, and now you have your lower high, higher low before the alert. You see, the alert was what, at 9 o'clock? We said.
9 o'clock. Yeah, I had the D 2 candles before the alert. Sorry, Z.
There's 9 o'clock is right there.
Yeah, so I had.
I do like having this the drawing of the wedge. I like keeping where I have some room for when I get the alert. I have some room for it to be able to maneuver. I don't
Right.
really like it. I like tucking it in as close as I can, but when this 15-minute candle comes all the way down, I like to maybe give a little bit more wiggle room before the actual break.
Yeah,
Now, the
because
thing
I
I liked
had.
about this one was because my major trend line got broken right
Sure.
off the bat. That was why I liked that one.
Hmm. Yeah.
But the stop should be, if this comes down and breaks the bottom, I mean, that broke, this could be, again, this could be the little bit of that fake out that we're looking at
Right.
sometimes.
Hmm. Yeah.
Because this thing still has, let's see here.
Yeah. The yen it's a 3-2 split. I mean, it's in the. I gotta grab this hematologist.
Okay. And we'll see what happens when the market opens up here today. Now, if you're looking at this yellow, in fact, I'm going to draw this one. That's the higher time frame here. This is what the 15-minute wedge was drawn reference to. And so you can take it from the B here. You could take it from that. It was ascending. So this is the area that is trading. Once it breaks through the top, it follows the upper slope. If it breaks through the bottom, we may be able to have another little, but right now we got the 62. This one's holding the 62. So that's a good sign. Take a little bit of heat on this one because it came back into the, now if I have the D here just before the wedge, let's see, we could take this over here. Anchor, here's a hit, didn't close above, but this is the area of indecisiveness right in here. So where we got to be a little careful.
I'm back.
Okay, you didn't miss anything. I said it did break the bigger trend line. Actually, we had the trend line was over here.
Al, are you talking or just doing?
Should be talking. Do you hear me?
Because I don't have any audio. Oh, wait a minute.
I hear you.
Sorry,
Okay.
my fault.
All right. I'm still liking this for a long right now.
Mhm.
Came back down, pulled back, didn't close. came back into our 40-60 range, but our 8-period RSI is coming out of it. What's our CAD trade doing? Let's see what our CAD is doing here. Still bouncing off the 62 in the trend line, so that nothing earth-shattering there. Nothing's changed. Back over to our US yen. I'm still liking this as a long right now. Go to my 15-minute chart. Still kind of fighting. The dollar is still trying to get a little bit more strength to the yen. You see why I like to keep the stop below the 62, especially when it breaks above it and it comes back, retests it. You can see where it hasn't closed below it here. It broke it on this candle on the 5-minute. Let me just expand this a little bit. It came up, it broke the 62, came back, retested it, couldn't close below it, came up, retested the top of the wedge, broke to the top of the wedge, came back, retested the 62. That's why I say I like keeping my stop below that area or below the wedge, just to keep it out of harm's way. Give us some room to breathe, because oftentimes what happens is it gets people sucked in. They try and take some stops, and then they run it on up. But right now, this thing, you should be able to follow the 62 on this 5-minute chart. Actually, maybe I'll follow the 13, as long as these two are showing more and more distance between them. That's going to be a good thing. Once they start narrowing out a little bit, that's going to be time to maybe start thinking the end of the move is there. I still like this as our 7-pip target. And we'll see if it gets that. If I look over here to the left, you'll see that here was a pivot high, which is right below where my target is. So this is a zone that is going to, this would be a potential target zone right in here. This wick right in this area. And if we were to measure a stick, let's try it and see what a stick looks like off the BC area, looking for the C. I'm going to look for this area right in here for the measurement. Find my stick. I'll move this over into, I'm going to put this on right up to the top, right above the C on the trend line. Snap this thing down to where my C is. There's my stick. Look, I might put this off for a target area. Here's the break of the trend. This is the target. Almost to the pip, 7 pips. And if it breaks out the bottom, you'll be looking at it down this direction. And if you're real aggressive, you could take your stick and you could take it from the A area. So to put above where the A is, this is going to give you a little bit larger target. Here's target 1, here's target 2. Target 1, target 2. And if this area breaks, here's where target 2 is going to, here's the next area. I'm going to use the top of this wick to the bottom of the to the top of the candle. Move it over the side, and let's see where it takes us. I do want to see it get through this area here. This is a key area right off of this third hit. Actually, if I go back to here, let's see where that comes. Here's 9:30. Market is now opening. Like I said, one of Matt's criteria is he wants it to break the top of the wedge by 2 pips. Now, if we use this wedge, this was the major wedge. Let's see if we do the same thing to this area, which is what we drew off the alert. Let's see where that falls into play. There's a break. This would have been this would be 2 pips right up to here. You got the 2 pip move, got the close. We'll see what happens. We'll see if this thing can close inside this area. Let me take this one off.
Al, can you just drag your screen down a little bit? I just want to get the target numbers.
Oh,
Thanks.
Like this. There you go.
Yeah, that's great. Thank you. I appreciate it.
Middle of this target is right about 105.78. The middle of this target is 105.73. There's only 5 pips apart.
Yeah.
Anybody have any questions, comments? Raise your hand. I can turn your mic on if you have any questions. Just raise your hand and see what we can do.
A little quiet.
A
Oh,
little
wait.
quiet. Everybody's watching. Oh, here we go. All right, Rajiv, here we go. Your mic is open. Go ahead and yes, go away.
And Hindle also.
Open.
Hi, good morning, Al.
Good morning, Rajiv.
Good morning, Christine. How are you?
Good, good morning.
So are we bringing that 2 pip spread or the zone which we used to have it, say, a month or 2 back?
Yes. Yeah. I'm starting to redo that again. I kind of stopped doing it because I was looking at basically price action with the. I'm still finding is that both ways I think are valid. Sometimes it's just might easier just making the 2 pips, and I'm not sure which way is better or worse. I think either way is acceptable. It's more about what you. I mean, I think. I don't know if one's better than the other, to be honest with you. This may be a little bit simpler, just having the 2 pip area.
Right. So I think that I kind of go with that. more because of like these fake headouts which happen, like 2 pip zone if you have that, and if kind of it closes out of that, and kind of as we used to say that like closes out and then come and maybe retraces and then goes off, then we'll
Yeah.
enter. So I think that will probably cut down the possible uh, trades where we get caught in,
Yeah.
like especially these fake outs.
So you think the 2 pip zone is a better way to go than maybe looking for the price action before it?
Yeah, because
Is that your
when we
thoughts?
see these 2 pip zone, and then we usually like we try to see if there is what was the last time the price was rejected, and
Yeah.
usually these 2 pip zone, or say maybe 3 pip zone, kind of around then that number, we'll have a fair idea if the price closes above this, then this price is going to go our way or not our way. We'll have a fair idea. That's
Yeah.
what I thought. That's
Yeah.
what I feel that it works better.
Well, I think I'm leaning towards that conclusion as well. So I'm going to go back to drawing these 2 pip zones, trying to get at least a
Right.
2 pip move, get a break of the wedge, at least 2 pips, preferably get a close inside that area if you can to get the position long.
Hmm. Right.
So
Yeah.
yeah, okay, well, good. Well, thank you for your opinion on that. I think it's a valid comment. Um,
And
All
down.
right,
Hindle,
I'm back. Sorry,
okay,
guys.
Thank you.
and Hindle, you've got the mic. What's your question, Hindle?
Okay, how you guys doing?
Good morning.
Right.
Good morning. Yes, Al, I wanted to know like if the trade is going against you, how far should you let it run before you could exit the trade? Because sometimes you can let it run too far before we exit.
Yeah, there's nothing wrong with using that 7 pip target, 7 pip stop. Uh, Obviously, the more room you give it, the less chance you are of getting stopped out. I've been liking a little bit more like a 10 or 12 pip stop. But if we get in the right position, basically, if we're in the right, if we get a good entry, a 7 pip stop should be enough. What we've been seeing lately is that we've been getting the alerts have been such to where we're not getting quite the entry that we're wanting to, and I personally I like seeing a price area more so than just a fixed stop. In other words, I like seeing it. I want to see if it breaks, and if it breaks the bottom wedge. In this case, like if it breaks the bottom wedge, if it breaks the moving average, I want to be out of the trade. Most of the time, that area will 7 pips will keep you in that area. I give it a few more pips just so it doesn't wick me out. See, a lot of times too, if you see like this wick right here, if I had my stop down here, this wick, even though it never hit my stop, the spread would take me out. So I try and give it that extra little bit of wiggle room. Right now we have a 1.4 spread. Uh, like I said, but if my stop were within 1.4 of this blue candle right now, I would have been stopped out. So I like keeping a little bit below that. I prefer to look and see where the zones are, to where I don't want to see. In other words, like I don't want to see price break and close below this moving average. So I'll keep my stop down here, but oftentimes you'll see me put a visual stop right on that area, saying, okay, if this thing stops, if I get a close below this point, if I can get this thing to come up here, if I get a close below, say like the moving average, usually like the moving average for a reference. I'll say, if I get a close below, I'll put a visual stop. And I'm sitting here watching these charts anyway. I may as well, I want to decide when to get out. I'll say, if I get a close below here, it's liable to come back out wick. And if it can't break that area, then I'm out of the trade. If it wicks down and would have taken me out, but if it comes back in and closes above, where that was just a strong wick move down, like even like this blue candle right here. If you look at this, there's a strong move down. Okay, came back, it tagged. If I have my visual stop, let's say I have my visual stop right up here. It came in, it wicked me out, but it came right back. I'd still be in the trade. But if it came down and closed, and they say, okay, especially with a closed with a very small candle, then I just get out, because if it has a really small candle, there's a good chance it's going to come back and go even deeper. Does that
Okay,
make
thank
sense?
you.
Yeah, like say this red candle right here. Let's say my stop was, I say my visual stop is going to be the moving average of, let's say this area right in here. And say, okay, if it it broke it, it challenged it, but it came right back up. Fairly good sized wick, not a bad sized wick. I still stay in this trade, even though it broke my stops. That's why I like having a stop zone, where I can keep my stop below this. That way I can decide when to. I don't want nothing I hate more than having come in where the price doesn't even get to where my stop out is, where my stop is, and you look at the chart and you say, well, it didn't even hit it. Well, the reason why it didn't hit it is because the spread took me out. So I want to see the price action, and then I want to keep it, and then I want to decide, okay, if it closes below here, I'm out of the trade. If it closes below here, I'm out of the trade. Until then, I'm just going to keep this one out of harm's way. And if I got in up this point and I measure it, so if I got in here and my stop zone, there's 5 pips. I'm still good. Here's my 7 pips. I've got this at 9 pips, but really I could tuck it in a little bit closer if I wanted to. But I'd like keeping. I'm still looking at my stop zone being within about 5 to 7 pips. I don't want to have it just wick me out just by the spread. Okay, does that answer your question?
Yes, that is. Thank you.
Okay, good. Any other questions? We have about 20 more minutes. Let's see, how's our CAD trade doing?
It's coming down.
We came down right now. We did get a close below, but it's still kind of going sideways here.
It's meandering and stinking.
It's meandering inside this area.
Yeah, sorry about that. I had a really important phone call I had to take.
Okay. That's okay.
But what did you guys do with this one?
Well, basically, we haven't done anything with the U.S. CAD yet. We started looking at the U.S. yen because that was the alert, and we basically drew the alert. And to get you up to speed on what I did was here was the alert, and it was an ascending. So we have the A, B, A, C down here. We had a choice. We could either take the B, move it up here to where the trend line was, and look for a hit, or we could keep this one as an ascending, have the top and bottom both be ascending, and I could use this one as a area where the anchor, here's a hit, here's the break. We drew our 2 pip line, and actually it seems like there's I'm going to start drawing these 2 pip areas off of the wedge.
Okay.
We got the 2 pip break. It broke 2 pips, closed inside, took the trade. Right now it's coming against us a little bit, but still came back inside the wedge. And right now my target is going to be, my get out point is going to be, if I get a break below here and close, then I'll be out of the trade.
So here you got a candle in your direction, it closed, but the body is not really big, eh? It's a huge wick.
This one
that might be a new thing we can look at, as having that that on the way up.
It was a strong rejection. It came back down and had a strong rejection off of the 62.
And did you enter once it broke the
well, I entered up here.
Yeah.
When it broke and closed, I ended up here. Here's where my fill was. And actually it was off of this trend line that I was looking at more so than but they're both at pretty much at the same spot.
Right. Yeah, it's pretty close.
Well, let me change this. It actually was right here.
Okay.
So this was the higher trend line here, where we had the anchor. This was the near hit, but this one was probably a little bit better. This one was better. So this was actually more like the 3rd hit down here. Here's the anchor, near hit, but not real conducive. Here's a hit, still a lower low. Here's the 3rd hit. We had the break, and also broke this other trend line coming here from the BD. So it kind of broke in that area, but it's not giving us a lot of confidence here right now. But here's our anchor, here's our hit. We don't have the 3rd hit on this trend line right now. If we get the 3rd hit, it's going to bounce. If it breaks, now if this one breaks on the downside, then we're looking at this for our target. But right now I still see the If I look at my RCS tool, the dollar is still a little bit stronger here, not by a lot, but still stronger on the 15. We did get the secondary close crossover of the moving averages on the 1 minute, could be the pullback. Here's our 30 minutes 62. So that's just an area I want to stay on the other side of it. Because if we come down and get a bounce, we could get a bounce over here only to take us out up longer. So right now it's in the side of the wedge, still consolidating with no real clear direction, but I still favor it to the upside.
Okay, I follow you. Let's see. And that UJ was at 1 o'clock or whatever that time is on my thing.
9 o'clock. It was 9 o'clock.
Yeah, so it's got weird. I need to adjust my time. Okay. Perfect.
But I'm looking that we had a consolidation on, let's see, at the 4:30. Yeah, right here. Here's the consolidation. Here's what we call the convergence, the multi-time frame convergence here at the A. And now it's looking, that would be the bottom. And now we're looking at it to wait for it to get up to the top of it. This would have been a better area to be able to take it long, but again, we didn't get the alert at that time. But right now it is making higher lows and higher highs to a point. And it did break this trend line, so it did, and it really, actually, it did break, it came right up to the top of where this hit was. Here was the hit from the trend line, the last hit. Here's the third hit. So this is the area that I still like to see it be able to get above, but it came right up and wicked right up to that. It did break it. So this area is now gone. This one's been used up. And now we're looking at this area. And we drew the sticks drew this stick based on the C, this area between the C and the B. I drew it off of this one. And then this stick I drew off of the A to the trend line. So those are two different target areas if it breaks to the upside. Still respecting the 62, still respecting the bottom of the wedge. We haven't got the third hit yet, although this one's trying to give the hit, and either it's going to be rejected to break to the upside, or this one's going to break to the downside. And we wait.
Yeah, let's see. Well, just for the record, I'm still stuck in the USD CAD trade. I told you that I would close it if it went up and closed on top of the 30 minute 62, but I was away and I had a phone call that I couldn't, that I had to take. So,
but it's still respecting the top of the wedge. It's still respecting that. So
it is.
there's no reason to get out just yet, but also there's reason to be cautious. We haven't got a confirmation that it's going to break with any uh, significant move yet. I still like to see a close inside this area, and I consider this to be a little bit of a trap area inside this. So it's like if it closes, if it can break through the top of this whole entry area, then I say maybe we're looking at this for the target. But right now I'm looking at this as being more as much of a trap as it is an entry area. So you just may just want to stay away from that.
Yeah, kind of just waiting for things to play out.
Yeah.
Seeing if I can get an exit. Oh my goodness. The little one didn't want to go to sleep, so after I fed him.
Yeah, so right now with this, right now it did break out, came back into the wedge, still respecting this other trend line. Okay, here's our third, here's the break, here's the retest, pull back up. We did not get a close below this trend line. And right now we're getting the convergence between the AC area, right in here, you got that convergence. It's right at the peak of this triangle, of this wedge. Now let's make a decision which way it's going to go. If this stop gets stopped out, I'll be looking to reverse the position. Again, I'm still looking at only roughly, I think it was 5 pips to this zone and 7 pips. So I'm still within my 7 pip target range of my stop. 7. That's about it. Let me just make this 7, just so you can see what the difference is.
Yeah. The wicks on UCAT are pretty violent today. I don't know about you, but what I'm seeing here is just, they're big. Some of those 5-minute wicks are 10 pips in size.
I said the question was asked earlier, Matt, about the stops using more than a 7 pip stop, and basically my answer to that was I like starting with the 7 pip stop. I like seeing have a visual stop zone, trying to keep the actual stop, especially while I'm sitting here looking at the chart, keep it out of an area where it could be retested, like the moving average or the bottom of the wick.
Yeah, because the spread's going to take you out.
And keep it at least out of the, have my visual stop, so if it goes in, it bounces, but the spread doesn't take me out. Like right now, the spread would probably take me out of this. And yet you see that didn't even come down to where the target, where it was.
No. So that's why you also need to use a broker that has a tight spread, and that's why it's absolutely critical.
Yeah. Now, these spreads aren't bad. This is like 1.2 spread. That's not too bad.
Fair. That's fair. Anything around 2, like you're going to have to revisit your broker. Find one that has better spreads, because that's not acceptable. You can't trade with a 7 pip, 10 pip stop loss and have a 2 pip spread. It's costing you too much in the long haul.
Yeah.
And God knows you don't want to extrapolate how much 2 pips is going to cost you over the course of a year. So find yourself a better broker. Yeah,
you also have to be careful with what pairs you trade, because some pairs have a 3 or 4 pip normal spread, and I just stay away from those pairs. So whenever especially if you look at some of these other exotic pairs, cross pairs, take a look and see what the spread is. And if the spread's more than 2 pips, you may want to rethink even trading that pair. And if you do trade it, then make sure you have to increase your stop. Now, some pairs, they have a pip is like most of our pairs of the U.S. Aussie U.S. U.S. yen is a little bit different. But if you look at like the Aussie U.S., the Canadian U.S., you'll see that the pip value varies too. So if you have a 10 pip value, a 2 pip spread is more than enough. If it's like a $6 per pip value, then you can afford a little bit bigger spread because the pip isn't worth as much. You still want to keep the dollar amount somewhat in line with what your expectations are. I like the fact that this came down and retested this trend, this purple trend line, came back, hasn't closed below it, hasn't closed below the bottom of the wick. Still respecting the AC line. And it has breached the BD line, which is, there's where the third hit was here. This part of the reason why it's having a little bit of problem because you had the third hit. Here's a hit, here's the anchor, here's the hit, here's the third hit right here at the D. It did breach this one on this move right here, and now it's just retesting it.
I have a question.
Yes.
Okay, in this instance, right,
Uh-huh.
where we have like a pinching of the moving averages, and we have where our hull is red, however, our RCS is in the correct way. It's not as spread as we like it to be. Now, I don't know if this is possible, but in your trade management, what do you prioritize as far as like, okay, the most important thing is, say, honoring the trend line, or the next important thing is, the order of my moving averages, or the next, like, am I stating it?
What's the priority?
Like, yeah.
Yeah, that's a good question. I think probably honoring the trend line is the first priority.
Yep.
The second priority, I like the moving average. In order to catch the run, I want all the moving averages to be in the proper order, in the same order. But when the RSI is stuck here in this middle range, you're kind of fighting. You're not getting a lot of momentum. You're not getting a lot of volatility. Once these RSIs break out of this 40-60 range, then I also want to see a hook at the bottom to go long. I want to see the hook of the blue one to go short. Now, I also want to see I like to see the consolidation of the orange and the blue up near and even like what Susan does, she doesn't want to take it short until it's at the 75% or at the long at the 25%. But right now, we're kind of this one was right at 71% here on the 8 period. We had the hook, this came out, but it's also, it's not giving us real strong follow through with this 8.
Mm-hmm.
I like to see the 8 and the 6 and the 3, the blue and the orange one, at least getting out of this 40-60 range in the direction. If I come up and get this one out of the direction, get the hook, come back and then get another hook on the blue as this one's still staying above the 60, that's a real win-win to me. When this one hooks and everything falls back into the 40-60 range, this one falls down here and this one still stays here, it's not a lot of confirmation that's going to go short. I want to see both of these I want to see the orange one at least be out of the 40-60 range when this thing hooks. I like to see it hook and then cross over for the up move. Because I want to see this blue cross, like we had this hook down here below. It hooked. It didn't get all the way down to the 11. So this one got up to the 89. It hooked, but you see also now it came back through and it crossed. I would prefer to see it not cross. I'd rather see it stay above, but now this one came down, didn't hit the 11. Now it crossed again. So now it's having momentum to the upside. If this thing can keep on going and pull this 8 back up along with it, now we have something. And ideally, you'll see, like for this up move over here, you'll see where they all came out of the 40-60 range, came up hooked. It came down. It did cross below, but the orange one never went back into the 40-60.
Right.
Then it crossed again, and then that's where you got this move here.
Right.
You also see where this was lower. So that's where you see this is probably the top of the move. And that's why this was at the top of the wedge.
Mm-hmm.
And you're looking at the same type of situation here. You want to see them all. You want all the ducks to be aligned in a row. If they're not in the same, not in the order you want it to be, and sometimes they get in the order, and you just have to swing the bat and as long. But then you look and see if it's going to hold. This 8 hasn't broken out of. It came back into the 40-60. It hasn't broken to the downside. It hasn't broken out of yet. So right now it's just going sideways.
Right. Now, okay. So then does your RCS come next, and then ultimately your hull is beyond that.
Yeah, I like the hull. I don't put as much weight on the hull as Matt probably does or did. I like the moving averages. I like the 1 minute moving averages over here. I see these things consolidate, and once these consolidate and then they break, I like that the best. Right now, this is a lot of, look at all the wicks on this thing. It's not going. It's not going anywhere.
No, and it's a lot of currencies right now are moving in that same way. There's a lot of indecision, and as to what someone said a little earlier about stop loss, right now I'm being pretty flexible with my stop loss because of the wicks. They're just hard. It's just been hard. Just being honest, like the wicks are too big. It just makes trading these precise entries really challenging. I'm not using a 7-pip stop loss. I can't. So I adjust my position size to compensate for the bigger stop loss. That's why we use the position size calculator. Check this out. If you're position size calculating for a 7-pip stop loss and you decide to go 12 pips and you put 2% in the 7 pips, you're risking like 3.5% of your trading account in one trade. You're over risking.
Yeah.
You can't do that. You're gonna hurt yourself because your general win is going to be 2 to 3%. But if you take 2 losses in a row, then you're almost at 7% of your trading account. There's no room for huge losses in this kind of trading.
Yep. And on that note, it's now 10 o'clock and I need to get out of here because I have to make my appointment. This trade is still, I'll keep my screen. Well, actually, I'm going to shut the room down here. But
yeah, I've got.
But anyway, keep in mind, you see where our targets are. You see where our stops are. I'm going to maintain the stop same place where if I get stopped out when I'm gone, it gets stopped out. That's just the way it is. But I still have, I'm still somewhat optimistic that the dollar is going to get stronger as time goes on here, break to the upside and look for my target. I'm going to slide my target down here just a little bit, just because I'm not going to be here to monitor it. I'll take my 5-pip target on this. And with that note, thanks everybody for coming in. We'll see you again tomorrow. And tomorrow is Wednesday, so we'll have probably another short session tomorrow. But stay green, and we'll see everybody later.
Have a good day.
Have a good day.
Take care, everyone.
Everybody, be well. God bless.
Bye.